Good afternoon. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormus Vatakia. With me today is Reema Tendulkar. Reema, good afternoon. Well, no reason to complain. Absolutely.
What a fantastic start to the week.
Absolutely. And we've recovered almost everything that we lost on Friday, almost at Friday's high as well. So a 1,000-point gain on the Sensex. Great going for the bulls.
Indeed. And the Nifty is now scaled at 24,300 mark yet again. Let's run you through the top headlines and then we'll get cracking on the mid-cap action. Key indices trade near the day's high as stocks stage a rebound after Friday's week close, with energy, healthcare and industrials being the big gainers, even as IT dragged. Mid-caps outperform.
Aegis Networks has tanked over 10% in today's trade after reporting a net loss compared to a profit in the base quarter. The order book has also declined year on year and on a sequential basis to just over 1,000 crore rupees.
Ramkrishna Forgings under pressure after the company discovered discrepancies in certain cases of inventory. The company has appointed an independent external agency to conduct a fact-finding study for the discrepancies.
IGL has surged after reporting a healthy fourth quarter. The management tells CNBC-TV18 that they maintain their near-term EBITDA guidance of 6 to 7 rupees per SCM and a long-term guidance of 7 to 8 rupees per SCM despite a fall seen over the last two quarters. Well, almost a 285-point surge on the Nifty, a 1,000-point surge on the Sensex. The bulls are making a comeback, and how? But there are, of course, a lot of specific stocks that are moving. It is the defense stocks that are doing very well for themselves in today's session. And, of course, there are earnings reactions, too, that are going in thick and fast. But, of course, there are plenty of movers. The broader markets, too, doing well for themselves. It's not as if the broader markets are not. In fact, look at Reliance at the highest point of the day now, 5.5% higher on the stock. The mid-cap index is up almost 800 points. The small-cap index too seeing gains of a similar quantum as well. But what are the charts indicating now? Now that we have recovered, we are back above the 200-day moving average. Ruchit Jain of Motilal Oswal Financial Services is joining in for just that. Ruchit, good afternoon. Thank you for joining in. Now that we are nearing Friday's high, but this 24,350 level is proving to be a bit of a barrier for the Nifty. What are the charts indicating here? What do you do now that the dip has been bought into very convincingly? What next for the Nifty and your stock calls as well for the afternoon?
Yeah, very good afternoon, Abbas. This seems to be a resumption of that high top, high bottom structure which we have been witnessing since last 1 month. If we just recollect that 23,800 to 23,850 was a significant resistance zone in the month of February and March. But we witnessed a breakout above that 23,800, 850, at the start of the April. And if we see the Friday's low, it is exactly in this range. So in technical analysis, what we say, the previous once resistance is broken out, it becomes a support and pullback moves, and that zone exactly has acted as a support. So I think 23,800 becomes a make or break level until this is intact, because this up move has now been again supported by heavyweights today. So I think we should see a continuation of the up move momentum. So any dip that has been bought into, one should hold on to the long positions. Ideal near-term levels that we are watching out on the higher side is around 24,550, which is the 61.8% retracement of the entire correction that we had seen from the all-time high levels to recent low of 21,750. A couple of recommendations, Normal, on the long side to play this up move. One is, definitely one would be from the defense space, because we are witnessing a breakout in many of the stocks from the defense space. So HAL would be a pick at current levels, where a falling trend line breakout has been seen with very rising volumes. So I think the sector as a whole should do well in the short term. When HAL short-term traders can buy with stop loss below 42.70 for potential targets around 4,700. And pharma names, some selective pharma names are looking good over here, within which Sun Pharma, the heavyweight, has given a breakout today with good volumes of last 2 to 3 months of consolidation. So I think Sun Pharma also should do well. One can buy with stop below 1,780 for potential targets around 1,900 to 1,920.
What about Reliance Industries? It's quite a breakout that we've seen today. And I know Reliance has gone through a period of underperformance. I was checking for the last 3 years. In 3 years, the stock is down 5%. So it's not participated in the up move. If it did, it would retrace back. From here on, what are the charts telling you?
So, Rima, I think after a long time, the stock has surpassed its 200-day moving average as well. Every time the stock was showing a pullback move, the 200 DMA was acting as a hurdle. which has been crossed today. And the good thing is that volumes post the numbers today have been very good. So I think we should see a continuation of the momentum in Reliance too. Next major resistance for the stock would be around swing high, which is around 1550 kind of levels. So I think at least one can expect a move towards between 1500 to 1550 from current levels.
Shriram Finance is the top loser, down 5%, and that's breached its 50, 100 and 200-day moving average with the fall that we witnessed. Is there more weakness in store?
So I think overall NBFC space has done well in this last 2.5 months. Shriram Finance has seen more of a consolidation phase. 580 is very crucial support for the stock, which was the previous swing low. So as of now, in spite of last 2 days corrective phase, we have not seen the previous swing lows getting breached in the stock. So I believe that it would continue to see some consolidation amidst the sectoral up move, but definitely not expecting it to be an outperformer within the sector.
Thank you very much for joining in. And now let's get to our mid-cap mover segment. Hormus has now moved over to the big wall, and he's going to tell us about all the mid-caps that are moving and shaking today.
Important numbers coming in from KPIT Tech just a few minutes back. We are still awaiting management commentary on the guidance going forward. Of course, we are awaiting numbers from Ultratech as well in just a few minutes from now. But of course, there are plenty of earnings reactions in today's session. And RBL Bank is the top gainer on the Nifty 500 after its quarterly results. Although analysts are still projecting a bit of a cautious stance on the mid-cap lender. But at the highest point of the day now, 10.5% higher. Zensar too having a good day in the office today. But Tejas Networks, that is the one stock that has not seen a recovery, even as L&T Finance has recovered from the day's low. But Tejas Networks making new lows now, 11.5% lower, the top loser on the Nifty 500. Defense as a space is up and about today. Almost every single defense stock is seeing gains of anywhere between 5 to 10%. Garden Reach, Data Patterns, Cochin Shipyard, Bharat Dynamics. You can see the gains here. Paras Defense too is trading with gains of around 11% as we speak. So great going for a lot of these defense names. The newsmakers in today's session are also a plenty. There are plenty of news flow driven names. Sonata Software, after the $75 million deal, is now up 7.5%. Ramkrishna Forgings has had a very choppy session. At one point was down almost 10%, has recovered some of those losses. And Lupin too, after an important drug approval, trades with gains of around 4.5% in today's session. Stocks that are doing well or not so well on the back of strong volumes. And HEG is at the highest of the day, as is AB Fashion, and IGL too, after optimistic management commentary, doing well on strong volumes. And lastly, some stocks that are not doing well in today's session, bucking the trend if you could call it. Chola Finance, after the results, is down 5%. The NBFC space, another 5-star business finance, is at the lows of the day. Lloyds Metal too recovered from the lows, but still down 3.5%, as is Sterling and Wilson, recovering from a circuit, but still down 4% in today's trade, Reema.
Thank you very much for that. Get into a break. We'll get you more on the markets and individual stocks on the other side. Stay tuned.
Welcome back, and almost 300 points higher now on the index, continuing to maintain, but the Friday high continues to remain a bit of a barrier for the Nifty. 24,365 is that level. We are continuing to hover around that 24,330, 24,350 levels for the Nifty. But the mid-cap index too is slightly off the highs of the day, but still holding on to gains of well around about 750 to 800 points. There you can see the dip, that slight dip that came in is now getting bought into again, 825 points higher on the mid-cap index as well. But moving on to a sectoral conversation, the Tamil Nadu Money Lending Entities Bill now, which has been tabled to prevent coercive practices by money lending firms. Now, this bill aims to help economically weaker sections of the society. Now, to assess the impact of this on the microfinance institutions, we are now being joined by Sadaf Saeed, who is the CEO of Muthoot Microfinance. Sadaf, good afternoon. Thank you for joining in. I'd like to first start off with this right now. This bill that has been tabled in Tamil Nadu, what do you make of this? And it's a similar kind of situation that has emerged in Karnataka as well, right? So do you see that kind of a situation festering in Tamil Nadu as well going forward?
Good afternoon. Thank you for inviting me here. I think, first of all, let me mention that these are very early days. We are still assessing the bill and its impact. But on the face of it, I think one thing I would like to categorically mention that this is not exactly like how the Tamil Nadu bill was put in place, because Karnataka bill was put in place because Karnataka, after a lot of advocacy, we were able to convince the state government to exclude regulated entities out of the purview of that bill. As we read the Tamil Nadu bill, it already takes into the consideration that the regulated entities which are registered with RBI do not come under this bill. I think from the overall spirit of the bill and the content of the bill, it seems like it is for prevention of coercive practice in lending, which is being followed by unregulated entities. In essence, this is positive. I think this is good because we also don't want unnecessary stress over the customers. There are unregulated entities which are lending and they are following practices which may be coercive and may be forceful in nature in terms of recovery. I think those needs to be prevented. And in the long run, I think this would be good for the regulated entities, because as these entities move out and they don't indulge in lending business, there would be more healthier practice in terms of lending and recovery with the customer, and more market would be available. I don't think so. The impact of this bill would be similar to what happened in Karnataka, because Karnataka that was more driven out of a lot of reportage on various issues which are happening because of money lending activities, and it was envisaged to cover microfinance. But this bill is overall covering all the lending activities, be it NBFCs, cooperative, and other banks and other entities who are lending. So I think it's significantly different than Karnataka bill.
Okay, got that. Mr. Sayed, how big is the unregulated market in Tamil Nadu? How many unregistered lenders are there, and what would be the size of the overall amount that they have loaned out?
Yeah, difficult to gauge what is the unregulated space in terms of lending. I think it is estimated to be somewhat similar to what book we have in terms of the regulated entities which are there. So it is estimated to have around 20,000 to 30,000 crores of loans which are lent by various entities, which includes online players as well, which are not registered as NBFCs. So they are also there. They are operating from different zones, different territories. Local players are also there, which are lending under different structures. They are not registered with RBI. They don't come under the purview of the RBI.
So to your mind, in your assessment, 20 to 30,000 crore is the amount that these unregulated, unregistered lenders have loaned in the state of Tamil Nadu.
Correct.
And for you, the opportunity, or for players like you, the opportunity is market share.
Yes,
Correct?
absolutely. So we are one of the leaders in Tamil Nadu, and Tamil Nadu is a very mature market. It has always been among the top three kind of a portfolios for microfinance since last 15-20 years, and we have been in operation for 15 years. We are one of the leading players there. So we have seen the behavior of the customer is quite stable, and also the income levels of our customers are much better than some of the other markets. So I think from that perspective, it creates a lot of opportunity for us.
But Sadaf, do you believe that if at all firstly, have you seen any stress on ground? You've mentioned that Tamil Nadu is a very mature market, but are you seeing any stress on ground? Because there has been a lot of talk about this MFI stress. The companies have come and spoken on record about it. Have you witnessed anything on ground when it comes to a state like Tamil Nadu? And if at all there is stress on the ground, do you see a contagion effect spreading to the rest of the South Indian market as well, considering that there is a higher share of MFIs in that region?
So South is a very mature market as such for microfinance. I have not seen so far, as I said in my opening remark, these are early days. But as of today, we have not seen any impact on the ground for these news that have come in. But to tell you that the difference between what happened in Karnataka and what is happening in Tamil Nadu seems to be from a point of view of protecting the customers and protecting the vulnerable client, I think what happened in Karnataka was more driven by reportage. I don't want to blame the messenger, but a lot of media reportage happened on microfinance, and because of that, some legislation came into play. But here, I think it's slightly different in Tamil Nadu. It is a preventive measure to ensure that the economically weaker section does not get harassed unnecessarily, and people who are indulging in lending activity which are not registered do not indulge in any coercive practices. So I think these two nuances are quite important to understand. And from a customer point of view, the customer is fully aware that the obligation that they have from regulated entities, they would have to honor. And Tamil Nadu being a mature market, the literacy rate is also quite high. So people generally honor their commitment. So that is what has been our experience.
So you don't fear that the culture amongst the borrowers will change or deteriorate because some section of them, will not have to repay to the unregulated lenders. You don't fear any delay in recoveries or growth impacting for lenders like you.
Yeah, as of we don't feel that way. I think there is an important thing to understand that this is not any sort of waiver, or there is no such talk of waiver or any deferral or anything. This is only a talk about ensuring that the collection practices remain as per the RBI guidelines, and they are not any sort of coercive or forceful collection. So I think from that point of view, as long as you are an entity which is operating within the code of conduct prescribed by RBI and the various SROs, I think the business would be as usual. It would not get affected.
One final question from my end, Sadaf. Because of all of this, you mentioned that there are early days, and these are early days. But what about credit costs, asset quality? What is the feeling? What are you anticipating in the current quarter, and of course for FY26 as well?
I'm sorry, we are in the silent period. Our results are very close by. I can't comment on individual company, but I can tell you about the industry. Definitely, the credit costs are on the rise, and in the financial year end, most of the people will like to take the provisions or write-offs which are necessary to go into the next quarter in a cleaner slate. So the credit cost will rise. There are many reasons behind this. Of course, there was a credit cycle which changed during the last financial year, and there was a bit of a stress. In Tamil Nadu, there were heavy rains in 25 districts. So because of that also, there was an impact. In our case, we had natural calamity insurance for our customers, so we did not have so much of an impact on Tamil Nadu portfolio. But overall, definitely the credit costs are on the rise for the industry.
All right, Sadaf, thank you so much for sparing time and joining us today on this subject of the microfinance entity and the Tamil Nadu money lending entities bill as well. Well, by the way, some numbers on your screen. Sanghi Industries, a net loss of 117 crores. We just saw numbers from Sri Digvijay Cement as well, where the profits were down 90%, and Sanghi Industries too reporting a revenue growth of 17% for the quarter gone by. But we take a short break. On the other side, we'll tell you a very interesting analysis about the FMCG business of Reliance Industries after the fourth quarter, and mind you, it has become as big as a lot of listed entities. Stay tuned.
Reliance is betting big on its FMCG vertical. Mangalam is here now with the details. Mangalam.
So when you think of FMCG companies, there are a bunch of names that come to your mind. It may not necessarily be Reliance, but it's about time that it should be. Why? Because Reliance in its fourth quarter results told us in the retail segment the scale at which the company operates. However, what stood out was the pace at which Reliance's own consumer products, their FMCG vertical, are growing. In fact, Reliance, remember, entered the consumer goods space in 2022, and within 3 years, it has become a behemoth. Reliance Consumer Products actually sells more than Tata Consumer's India business in FY25. as big as Marico as well. In fact, they're almost as much as Marico and Dabur. If you take out their international business, then they're bigger than them. And for some of the smaller companies, Reliance is actually 3 times of Imami when it comes to sales for the FMCG products itself. In the fourth quarter earnings, Reliance did say that consumer brands became the fastest growing FMCG company in India, with them having achieved 11,450 crore of sales in just the second year of operations. Consumer brands actually expanded their reach through general trade, and that was the big positive, because you would say, okay, with 19,000 stores, it's very easy for Reliance to pump their products in their stores itself. But the part is that they're selling outside of that as well. There are nearly, 3.5 times growth that we saw in Reliance's general trade business. Campa itself has seen double-digit market share gain in key markets. And what are some of Reliance's consumer brands, you would wonder, right? Well, if you go to any of the stores, you would see Snack Tack, which is the food and beverage brand. There's Desi Kitchen. Campa recently launched Spinner, energy drink from Campa as well. A lot of the FMCG groceries are sold under the name of Independence. Then their acquisitions, they made the acquisition of Sil, which is spreads and sauces, Velvet personal care. Then you have some of the dishwashers, Dozo, Glimmer and Puric, which are soaps. Then home care products like, Home Guard, you have Enzo. What's interesting is that 60% plus of these sales come in from general trade, which currently are around 9 to 10 million overall universe. But Reliance's total reach in that itself has been 1 million stores. And have they targeted growth? Oh boy, yes. They are targeting a reach of 5 to 6 million stores in the next 3 years itself. And that would make it at par with some of the largest listed peers in terms of reach. Have they gotten there when it comes to sales? Let's look at how their sales compare on an FY25 or trailing 12-month FMCG sales basis. HUL at 61,000 crores. You have Nestle at 20,000 crores. Mind you, it took Nestle almost 60 years to get to that 10,000 crore mark. ITC FMCG in the last 12 months has done around 20,000 crores of sales. Britannia and Dabur close to 12 and 17,000. And here we have Reliance above Tata Consumer, above Marico, definitely above Dabur's India business itself. So it'll be very interesting to see where they scale from here and go further. Across a lot of conversations that I've had with industry leaders, competition from Reliance is something that they take very, very seriously. So should others fear it immediately? Well, if not immediately, then maybe imminently.
Indeed, as a behemoth that has been formed now, the FMCG business of Reliance Industries. Mangalam, thank you for that very interesting insight. With that, we call time on this edition of Midcap Radar. We'll leave you with the Nifty still 300 points higher, still looking to cross Friday's high, and at that 24,350 mark. From Rima, me and the team that put this show together, thank you so much for watching. Your stocks for the next 30 minutes.